It's year-end time and everyone is going to be doing their annual financial statement. In this video, I'm going to be taking you through what documents does your accountant need from you at year-end. Remember, your numbers are as good as the paperwork behind them. That's why documentation, the receipts, the invoices that are needed by your accountant to be able to compile those accurate financial statements. Hi, I'm Babana the accountant. I help small business owners understand their numbers, build profitable and also compliant businesses. And let's talk year-end, because this is where most people panic, because they want the annual financial statements, they want the reports, they want to be compliant, and this is the time for it. Most businesses, their financial year-end will end on the 28th of February. This is now, we are on the 2026, we're concluding the 2026 financial year, but before we kick on into the 2027 financial year, we need to make sure that this one runs smoothly. We all agree on the closing balances, we all agree on the revenue that we've made and the tax that is going to be paid and everything that is required in terms of compliance. If you've been using the manual process, then you've been sending the bank statements to your accountant, or you've had your bank statements, you are using an old method, but let's humor you just a bit. If you are using them, then you're gonna have to send those bank statements in a PDF form, but then most banks now have an option for you to download the bank statements in an OFX format, CSV format. Those formats are actually enable the accountant on which software that they're using, especially if they're using an online software like a cloud software, they're able to just import those bank statements without asking you to without capturing them, which is going to be saving time as well. But then if you are still using the old method, it's going to be bank statements that are coming from your loan accounts. You need to be, if you've bought a vehicle or any asset, or you have borrowed money from a bank or any institution, you need to be keeping record of those statements, because those are very important in order to calculate the interest that has been accumulated and also the balances for record keeping. If your business is doing any savings, is saving or is investing, we need those savings accounts. We need those statements from those savings accounts. So everything that has to do with the business in terms of finances, bank, if you are banking with more than one bank, you need to be collecting all of that information. The real work comes in on the bank statement, actually. That's where it comes in, and that's what we need to find out. Because if what we've been capturing on the system or what we have, but then does not actually tie up to the information that is reflecting on the bank statement, then we need to make sure that we go through a process that we call reconciliation. Bank reconciliation means what we have recorded versus what is reflecting on the bank statement. Those amounts need to be together. So that means we need to be allocating the invoices and making sure that the statements are correct that we're sending out to your clients. The TAP systems with the POS systems have made it so much easier for you to link your point of sale system. If you are running a cafe or you're running a shop, to link that point of sale system to your bank, automatically those transactions just go there. But then if you're using a separate system and you still have to pull that information, and actually some systems link us also to the accounting system, which makes it seamless. If you're using, I'm always going to be an advocate for a business owner to have a software system, because it just makes everyone who's involved, who's collaborating in the success of your business, it makes their jobs more efficient. I mean, we need to be working more effectively. We need to make sure that everyone who's working within the business is working efficiently and is saving time. So that is the reason why I'm advocating for you to have a software. But if you don't have a software, then you're gonna have to go to your system and make sure that you have the sales, the daily sales, the total sales. That is a lot of work, because if you have not been having someone who's doing it for you on a monthly basis, that actually is going to take up so much of the time from the other person that is doing the work, which is also extract from the value that they're supposed to be giving you, because an accountant is supposed to interpret the numbers that they're presenting to you for you to understand your profitability and also understand your credit risk, understand what other opportunities that you as the business owner can actually partake in, what other more funding opportunities that you can get. So limiting that time by making sure that you have a software system, you are doing the bookkeeping, there's a bookkeeper, you're tracing those numbers on a monthly basis, alleviating that work from the accountant then saves time and also helps you have an overall insight on what is happening within your business. Expenses will range from your fixed expenses to your variable expenses. Fixed expenses are your rent, water and electricity, things that you cannot shop and change. I mean, you're going to be paying those expenses if you've committed to have a rental space. And also petrol and all those are fixed, but then as much as they are variable on the amounts, because you don't have a fixed amount for the petrol and expenses, but then they're going to be recorded on a monthly basis as your expenses. We're also going to need asset register. If you are having assets in your business, you've bought assets in for your business, laptops, you've bought vehicles, you've bought equipment, that needs to be recorded as well, because just because you're buying a laptop for your business, you need to make sure that it is also, because it's not going to be taken as an expense, it's going to be taken as an asset. It needs to be, you need to account for depreciation as the accountant. So you as a small business owner need to make sure that you have proper records of what assets that you've bought, how much you bought those assets for, were you buying them for on credit, how much was the credit, you buy them on cash. If you bought them on cash, you're going to appear on the back statement. One last one that I can running through this list, we cannot forget the most important one, which is loan agreements, director loans. You know, we as directors like to maybe say, I'll just do a director loan from the business to myself, but then you're not recording, you're not drawing up an agreement between you and the business, the terms of that loan and the interest that is going to be charged on the loan that the business is borrowing you, and also, like I mentioned, the terms and the amount of money that the business is borrowing you. So you need to make sure that you have those loan agreements, and also external loan agreements as well with your funders if you are being funded, and also with the banks, your financial institutions. Those are the agreements that we need to have in record, and that plays into proper documentation. That is the documentation and the filing system that we need. You can use Plus systems to actually have that information. This is just some of the information that an accountant will ask from a small business owner. This is a small business owner that does not have a lot of functionality. I didn't mention inventory, because inventory is part of what is going to be needed at financial year end, because we need to record what the opening stocks and the stock that is currently sitting with you at year end. That is also important. Your VAT, if you are VAT registered, we need to reconcile the VAT and make sure that we are VAT compliant. I mean, all this information is not being asked from you just for the sake of you asking the information, but it's for accuracy, making sure that you are tax compliant, protecting you from penalties, because SARS will verify the information, will just randomly ask for supporting documentation, or maybe will ask for an audit. Because if you don't have this information at hand, it is better to always be ready, so that when you have this, when you're being asked to verify this information, you can just pull it and send it. So that also limits the risk of you getting those penalties. So this is some of the information that we need at year end. So if you are running a small business and you are collaborating with an accountant, start thinking of compiling this information and limit the back and forth between you and the accountant, because every information that you've given them, if you know that you've taken a loan and they're going to be seeing that loan coming into your bank account, they're still going to ask you for those source documents. So to make sure that we maximize on the time, we are more efficient, we collaborate better, make sure that your business runs profitable and also is compliant. If you enjoyed this video, like and comment on this video, and also subscribe to my channel. If you are working with an accountant, let me know how is that relationship. Are you ready for year end? If you are not working with an accountant, please let me know why. Is your business compliant? If you're not working with an accountant, let me know, comment down below as well, and let me know what challenges did you have previously with your accountant.